Welcome to Smart Stock Watch. Today is November 11th, 2025, and we're diving into EVgo's latest earnings report for the third quarter of 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's great to be here to discuss EVgo, one of the leading public fast charging providers in the US. They've just released their Q3 2025 results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. EVgo reported a total revenue of $92.3 million for the third quarter, which is a 37% increase year over year. John, can you elaborate on the factors driving this growth?
Absolutely. The significant revenue growth is primarily driven by their charging network revenue, which hit a record $55.8 million, up 33% from last year. This marks the 15th consecutive quarter of double-digit growth in this segment. The gross profit also saw a substantial increase of 97% to $12.6 million, indicating strong operational performance.
Despite the impressive revenue growth, EVgo reported a net loss of $12.4 million. What are your thoughts on this?
While the net loss is a concern, it's important to note that the loss has narrowed compared to the previous year. This is a positive sign as the company continues to invest in expanding its network and infrastructure, which is crucial for long-term growth.
Operational efficiencies and future outlook. EVgo has been expanding its infrastructure rapidly. They ended the quarter with 4,590 stalls in operation, adding over 280 new stalls. How does this expansion impact their future outlook?
The expansion is a strategic move to capture the growing demand for EV charging. With a network throughput of 95 gigawatt-hours, a 25% increase year over year, EVgo is well-positioned to leverage the increasing adoption of electric vehicles. Their cash position of $201 million, along with additional borrowing, provides a solid financial foundation to support this growth.
What can we expect from EVgo in the coming quarters?
Looking ahead, EVgo plans to bring a substantial number of new charging stations online, which should further enhance their market position. The CEO, Badar Khan, mentioned an anticipated inflection point towards positive adjusted EBITDA, which is promising for future profitability.
EPS forecast and analyst expectations. Now let's discuss the earnings per share. EVgo reported an adjusted EPS of -9 which is better than the forecasted -8 by analysts. John, what does this tell us?
This is a significant beat on expectations. The fact that EVgo outperformed the forecast by such a margin indicates strong operational management and cost control. Their adjusted EBITDA also improved to $5 million, a 44% improvement from the previous year, showing progress towards profitability.
How does this performance align with the market's expectations?
The market likely views this positively, as beating EPS expectations often boosts investor confidence. It suggests that EVgo is on the right track with its strategic initiatives and financial management.
Strategic initiatives and market position. EVgo has been making strides with its strategic initiatives. Can you tell us more about their AutoCharge Plus and customer growth?
Sure. AutoCharge Plus accounted for 28% of total charging sessions, highlighting its growing popularity among users. EVgo also added over 149,000 new customer accounts, bringing the total to 1.6 million. This growth is crucial as it expands their user base and enhances network utilization.
What about their technological advancements and partnerships?
EVgo is advancing with NACS connectors, now available at nearly 100 stalls, and their PlugShare app has reached 7.4 million registered users. These initiatives not only improve customer experience, but also strengthen EVgo's market position as a leader in EV charging infrastructure.
Key takeaways. As we wrap up, John, could you summarize EVgo's performance and its investment prospects?
EVgo has demonstrated robust revenue growth and operational improvements, beating EPS expectations significantly. Their strategic expansion and strong cash position make them a compelling investment in the growing EV market. However, investors should be mindful of the high debt levels as they consider their investment decisions.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on EVgo's performance in the comments below.